I actually wrote a short list here. It's about 6 things on this list of things that you want to always make sure you do when it comes to home buying. These are things that can cost you hugely. And I mean, very big. Currently, I'm working through a situation right now where it is costing one gentleman about $40,000. And that's no exaggeration at all. So you want to make sure you pay attention to this list that I'm gonna go through. I'm gonna save the most important for last. So you could just skip through to the end to get the most important one, but then you're gonna miss all of the stuff in between. And it actually wasn't the last thing that's costing this gentleman money. It was some of the other things that are costing him money as well. So $40,000 is a lot. You want to make sure you're not in that boat. And so listen up, because we're going to go through this. We're not going to labor too much on it. Some of these things are going to go without saying, and it's not going to apply to most people, but some of them are going to apply to everybody. So getting started right off the bat, you want to make sure you get an appraisal. Now you might be thinking, of course I'm gonna get an appraisal because it's required by the lender when you get a loan to purchase a home. And though that's true, there are some situations, depending upon how much money you're putting down on the home, where you might not need to get an appraisal, or the requirement to get an appraisal might be waived. My recommendation, always get the appraisal. Know how much your home is worth. And that also could give you some room for negotiation as well. Let's say, for example, if you're going to put 50% down on a home, or you're going to put 40% down on a home, and the appraisal requirement ends up being waived. However, you're putting your purchase price is still your purchase price. So even if you're purchasing a $400,000 home, but you're going to put 40% as a down payment or 50% as a down payment, maybe if you get that home appraised and you find out it's worth maybe $20,000, $30,000 less than what you actually were about to pay for the house. That would be a situation in which getting that appraisal could save you 20 or 30,000, because now that you have that appraisal, you can go back to the seller and say, hey, just had this home appraised and it's worth 20,000 less than what we're in a contract for. I'm gonna need you to lower that price of this home so that we can continue on with this purchase, because I can in good faith continue on with this purchase price, knowing that it's $20,000 higher than what the home is actually worth. That's a situation in which you want to get the appraisal. Even if you didn't have to get the appraisal, having that appraisal done will help either justify the purchase price that you are currently under contract for, or it will let you know, no, this is the actual price of it, and it's much lower than what you were about to purchase the home for. And that's going to give you something to go back to the seller so that you can do a little bit more negotiating. But that's more to people, again, who have huge down payments, or they're paying all cash and they think, oh, I don't need an appraisal. Always get an appraisal. Second thing, always get title insurance. Title insurance is something that protects you. There's 2 types of title insurance. There's lender's title insurance, and then there's homeowner's title insurance. The lender is going to require you to pay title insurance for them. So if the lender thinks that it's important enough for the lender to have it, guess what? You need to be knowing that it's important for you to have it as well. So make sure that you get title insurance, because what this does is it protects you in the event that something was missed in the title search and someone comes and tries to stake claim or ownership to that property. They try to say, hey, I own this property that you bought and I want the property back, or I want the equity that I should have gotten out of the property when this property was sold to you. Whatever it is, this protects you from those types of claims, from someone coming back years later and saying that they have ownership in the property that you just bought. And if they have a legitimate claim to it, title insurance steps in and makes sure that you are made whole as well. So you don't have to worry about losing out on a house that you never really had the right to purchase in the first place. And now you're out of money and you're out of the house as well. Trust me, it has happened to a lot of people, which is why they have title insurance in place to protect people from situations such as this as well. So make sure you get the appraisal, make sure you get the title insurance. Number 3, you want to make sure that you get a home inspection. Now, this is one that some people skip out on. You have some guys in particular, I'm gonna pick on the guys for a minute, who are like, you know what? I know about houses. I know how to go around, look at a house and tell whether it's in good shape, bad shape. I can go up in the attic and look at the roof and see if there's any leaks. I can look at, the HVAC system and see the age of it and turn it on, make sure it's working, see if the hot water's working or if the hot water heater needs to be replaced. I can do all of that stuff. That's what you think. And even if you are correct in how well you know homes, get a home inspector to look at it. Having another set of eyes is only going to help pinpoint things that you might be overlooking. And having that home inspection now gives you something that's tangible, something more concrete that you can take to a seller and say, hey, these are the items that were noticed in the home inspection of things that need to be repaired, things that need to be replaced. Now, for most of the stuff that's on that home inspection report, it's not going to be anything that you're really going to want to concern yourself with, but there might be 1 or 2 or 3 major items on there that you do want to address with the seller. Maybe there's some rotting wood that you want replaced, or maybe that rotting wood is an indicator that you might have termites. So maybe you want to do a little bit deeper of an inspection to say, hey, I think we need to get a termite or wood infestation report done on this home to see if it has a problem with termites, because that could be a very costly repair. Maybe there are some cracks in the foundation, and maybe those cracks are just settling cracks from the house. All homes settle eventually over time, and maybe they're just, simple settling cracks, nothing to worry about. But maybe you have some, bigger, wider diagonal cracks going across your basement wall or floor or whatever. And now it's like, oh, wait, this is something that's a little bit more major that we need to pay attention to. So that's something that, again, a home inspector is going to be looking at, and they will be able to better inform you of, hey, these are some things that you really need to pay attention to. These are some things that you really need to take note of, and go back to the seller and negotiate, hey, we need to get these cracks taken care of. We need to get this foundation looked at by a structural engineer. We need to have a roofer take a look at, this area or this section of the roof, or the support beams that are up there. Whatever it is, they're going through this home with a fine-tooth comb and looking at the true condition of that home. They're going and testing the temperature difference between your returns and the registers for where your air is blowing out and where your air gets sucked back into the house as well, so that they know, hey, we're in that range of where it should be for heating the house and for cooling the house. They're checking the temperature of the hot water that comes out of your hot water with the sinks and everything. So they're looking through a fine-tooth comb, basically taking a fine-tooth comb through your home to look at everything, and then they're writing it up in a report. You want that. You don't want just your set of eyes looking around and saying, you know what, this looks all right to me. This looks pretty good. There's a little paint blotch over there is missing, but I don't think it's anything to worry about. You don't want to do that. You want to make sure that you have someone who does this routinely for a living, so they notice when something's out of place, because they're doing it all the time, looking at your property. It's going to cost you a few $100s. It may cost you $400, $500, maybe $600, depending upon the size and type of home you have, and if it has a crawl space or a basement, or if it's just on a slab. But in any case, get it done. Make sure you don't skimp on that part, because a lot of people have bought homes that they would not have bought if they had a home inspection done, because the home inspection would have revealed some of the issues with that home that would have prevented them from buying the house. And it's worth it for you to pay $400, $500, $600 now to discover that you don't want to get in a loan for $300,000, $400,000, $500,000 to purchase a home. It's better to just pay the $400, $500, $600 now and realize, you know what, I don't want to continue with this purchase, and you terminate it during your due diligence period, rather than you not get the home inspection and you proceed with purchasing a home that now has issues that are going to end up costing you $10,000, $20,000 just several years down the road. It happens. You end up finding out that, the basement floods when it rains, but there are tell signs that a home inspector may have been able to pick up on, that, hey, this basement has an issue with flooding that you might not have been able to pick up on. There are some things that, with the grade of the landscaping, where the home inspector might be able to pick up, hey, you know what, when it rains pretty hard, you're going to have an issue with water pooling up next to the house here because of how the grade is, or different things like that you might not be aware of, that home inspectors look at all the time because they do it routinely. Spend the money now, save yourself the trouble and the headache later. And if everything comes back good, great. You spent money to just give yourself a little bit more peace of mind to sleep at night. But if it doesn't come back good, you could be saving yourself a lot of headache as well. So moving on from the home inspection, have a due diligence period. I mentioned it briefly when I talked about home inspections, but now have a due diligence period. This is so important. Why would you want to go into a contract to purchase a home without giving yourself an out? you get under contract. And I'm saying this again because I've personally worked with people who've done this, but I also know individuals who, just to win the deal, win the contract, they'll cut out their due diligence period. Don't do that. If you have to cut out your safety net just to get the deal done, then don't get the deal done. Don't go purchase the home. Keep that safety net in there. If it means that you maybe up your purchase price a little bit, but you still keep that safety net in there, keep the safety net of your due diligence period and just up the price a couple $1,000s if that's what it's going to take to get the deal done. But don't get rid of the due diligence period. So if you don't know what the due diligence is, this is the period of time where generally at the beginning of your contract, you have to inspect the home, do as much inspection, looking around the home as you want to, hiring a home inspector. If you want to hire someone to look at the septic tank, if it's on a septic tank, if you want to hire a company to come in and do a mold inspection, termite letter or termite inspection, if you want to have that done, whatever inspections, radon inspection, if you want to have a radon test done, whatever it is that you want to inspect with that home, that due diligence period is the time frame in which you want to get it done. Because if any issues come up during that due diligence is when you want to go to the seller and request for them to address any of the concerns that you have. So if you have concerns about mold, if you've got concerns about a roof leak, if you've got concerns about termites, or even just routine repairs, maybe you've got a water heater that's not working or whatever, you want to address that up front with the seller during your due diligence period. Because if you wait until after your due diligence period, it's going to be a lot harder for you to be able to get financing, or not financing rather, but it's going to be a lot harder for you to negotiate for the seller to make the repairs or the replacements of certain items if you wait till after your due diligence period, because the seller's under there's nothing there that is going to keep you from walking away other than maybe the home not appraising for what it needs to appraise for, or you not being able to get financed. But other than that, your earnest money is on the hook. However, during your due diligence period, this is a period of time where you can walk away from the transaction for any reason at all and get your earnest money back. The only money that you would not be able to recoup is the money that you spent on the whatever inspections that you had done. But your earnest money, which is the money that you put up when you go under contract as like a good faith payment that you're serious about wanting to move forward with that purchase, that is money that after your due diligence period, you're liable to lose it for one of many reasons. There's a couple that you can still get it back, but during your due diligence period, that's when you want to get the work done. That's when because you can do all your research and decide, you know what, I still want to move forward with this purchase, and I'm going to put my earnest money on the line. But while you're in that due diligence, you are not obligated to continue with the purchase. You can walk away for any reason at all, and that's totally fine. That's the whole purpose of the due diligence period, is for you to do your due diligence and decide, is this the property that you really want to move forward with purchasing? But there are people who move forward with purchasing a property and they don't put a due diligence period in there. You don't want to put money on the line and you don't give yourself an out. So make sure you have that due diligence period. But I think we beat that horse enough. So we're going to keep going. If you love horses, I don't beat horses. It's just a figure of speech. But in any case, we're going to move on. I'm not going to stay there for too long. Ask how much your interest rate is. So that's the fifth thing. So the first, get an appraisal, get title insurance, get a home inspection, have a due diligence period. And the fifth thing is ask how much your interest rate is, how much it's going to cost you. I'm not talking about what your interest rate is. Ask how much your interest rate is going to cost you. There is a difference. And honestly, what you're paying for your interest rate can be much more important than what your actual interest rate is. For example, if you go to a loan officer and the loan officer says, hey, I can get you an 8% interest rate, not going to cost you anything. And another loan officer says, hey, I can get you a 6% interest rate. Most people say, okay, I'm going with the guy with the 6. Now, if the guy that's offering you the 6 says if it's going to charge you $20,000 to get that 6% interest rate, do you still want the 6%? And it's going to cost you $20,000. So you're paying $20,000 to save maybe $400 a month on your monthly mortgage payment, maybe $430 a month on your monthly mortgage payment, depending upon the price of the house. That's something that you really want to consider. So make sure that you ask how much that interest rate is. You don't want to go into this interest rate shopping ordeal after you get under contract and just pick the lowest rate and decide you want to go with it. That is the mistake that most first-time home buyers make. But because you're listening to this, you're not going to make that mistake. So you're going to ask every loan officer that you get a quote from. If it's just one, then ask them. But if it's multiple, then ask multiple loan officers, how much is it going to cost me to get my interest rate? You may have some loan officers that try to give you a number that's discount points. So it's going to cost you 1 discount point. It's going to cost you 2 points, 2.5 points, 1.5 points. Have them convert that into dollars for you. You don't speak points because you're not in the mortgage industry. And it's not your job to convert points into dollars. It's your lender's job to make sure that you understand the terms and conditions of what it is that you are receiving in that loan. So make them convert those points into dollars for you. If they say, oh, it's going to cost 1.5 points, how much is that in dollars? $6,000. Okay, so $6,000 to get that interest rate that you're quoting me. Okay, and now you know how to compare apples to apples, because this other guy that said he could get you an interest rate that's maybe a 0.25% higher, but he's going to give it to you for free. Maybe you take, you know what, I'm going to get the 0.25% higher interest rate. It's only going to cost me about $25 more, or $50 more on my monthly payment or whatever, but I'm going to save $6,000. So that's something that now you're comparing apples to apples, and you're like, you know what, I see where it's going to be a little bit more beneficial for me to get a slightly higher interest rate and pay nothing rather than pay $6,000 up front to get a 0.25% less. So always ask how much your interest rate costs. And I have, if you want to get more into details about what you need to know when it comes to interest rates, I've got videos talking about interest rates, discount points, buy down fees, all of that stuff. So just go searching throughout this channel and you will find that content. So on to the last one, the biggest one, the most important one. If you haven't guessed what it is right now, have a real estate agent. And this is coming from a loan officer. I'm also a licensed real estate agent, but I actually do loans. I don't represent clients much anymore. So have a real estate agent. This is the most valuable thing that you can possibly do when it comes to purchasing a home. And yet you have so many people who forego having a real estate agent because they want to A, save on the commission, or B, they think I can do it on my own. I don't need a real estate agent. And nothing could be further from the truth. You don't have someone advocating for you, and this is not the field that you work in on a regular basis. You are setting yourself up to get taken advantage of. And you don't want to be that person. You don't want to get taken advantage of because you didn't do what you needed to do because you just didn't know. Having a real estate agent is going to close so many gaps that you might have in your plan if you didn't have a real estate agent. Having a real estate agent advocating for you is going to save you way more money than what you can save on your own. Having a real estate agent is going to help you identify, a great real estate agent at that is going to help you identify issues that you may not otherwise know about with the home or with the terms of the contract and the agreement. They're going to know things about the contracts that they work with all the time that you, in just trying to purchase a home and trying to read through a contract and not really understanding all the verbiage, are not going to know. Real estate agents are well worth more than what you pay them in commission. And if you're a home buyer, you may pay their commission, but then their commission also may be paid by the seller. So you might be foregoing something that you're not even having to pay for. It only serves to your benefit to make sure that you have a real estate agent that's advocating for you, because that's really going to be something that is going to hugely impact your bottom line. So just to rehash these these 6 items that are on here: get an appraisal, get title insurance, get a home inspection, ask how much your interest rate is going to cost. You want to know how much money. They're going to talk in discount points, but you want to know how much cash is it going to cost for you to get the interest rate that you're getting quoted. And then the last one, make sure you have a real estate agent as well. This is not an all-inclusive list by any stretch of the imagination. However, it is a list that will get you started off in the right direction. And it really does cover some of the basics of what you really need to know in terms of what you should be doing to make sure that you're setting yourself up for success with purchasing a home. So with that, that is all that I have for you. Thank you for taking the time to tune in. As always, tune in on Fridays as well. That's when I drop the new episode of the Greatest Asset Community podcast every Friday at, actually the times vary a little bit, but I'm trying to get more consistent with that. So just make sure you tune in on Fridays. I'll put it that way. Make sure you tune in on Fridays. We dropped the most recent episode of the Greatest Asset Community podcast, and it's a little bit more, relaxed than, as always, the Home Finance Hacks is geared more towards saving you money on your mortgage payment, saving you money in upfront costs, saving you money over the life of your loan. So that's what we geared more towards the Home Finance Hacks. The Greatest Asset Community podcast, we go into a lot of other topics as well concerning real estate and finance, but we get a little bit more broad. Some of the stuff might just be more strategic rather than finance focused. But in any case, thank you for taking the time to tune in. I have a lot of great content on the channel, so do come back or stick around and just search through some of the videos on the channel, because it's a lot of stuff that I think you're going to find pours a lot of value back into your life, which is my ultimate goal in everything that I do with Incorporeal Build, Greatest Asset Community, Home Finance Hacks. I've got credit repair that's currently being offered for free as well. And when I say credit repair, let me specify, it's a credit repair or a credit education program. That is a better way of putting it. It's a credit education program that I created that I'm currently providing to people who want to get educated on what they need to do in order to repair their credit. I personally am not going to be repairing your credit. I do not have the time for that. So credit education program, I created 6 modules, whole bunch of lessons. You can learn all about credit, all about what you need to do to remove repossessions, to get charge-offs, collections removed from your credit report, what you need to do to improve your credit score, how to maintain good credit, some of the things that mortgage lenders are looking for when they're pulling your credit, some of the things that can hurt you with getting qualified for a mortgage loan. I put all of that stuff in the program. So on top of just repairing credit, it really does help you get a more complete understanding of how the mortgage industry and lenders are looking at your credit as well. So that's something that you really do. I highly recommend joining as well. And so I will put a link down in the description below, so you can click that link and watch the go through the modules. Like I said, it's free for now. Depending upon when you're watching this video, it might not be free anymore. So we'll see. But in any case, as of right now, it's currently being offered at no cost. So you could click the link in the description below and get started with learning about educating yourself on credit and how it relates to mortgage financing. And I also talk about how it relates to the interest rates you can get, the loan programs that open up doors, the loan programs that your credit can open up for you when you have better credit as well. So it's to your benefit to tune into that as well. But in any case, thank you for taking the time to tune in. As always, take care, be blessed, and we'll see you next week.